trading gold, the most important thing, if there's anything you're going to take away from this, is that you should know the correlations of gold and the US dollar. So that ultimately determines whether you're going to buy or sell gold. And we get to that at the end, because even with all this technical analysis, what really matters is the correlation between gold and the US dollar. So you want to go through a checklist. As usual, I go through a checklist, and the first thing I want to do is to identify a pattern, right? So first, whatever patterns you trade, I trade the traditional patterns. So this is a bullish flag, a typical bullish flag. So here's the pole of the flag, here is the body of the flag, and then what we're looking for is a buy entry into this up movement. So by the way, if it is a bullish flag, this is just the first take profit right here. So this would be a great investment for me for 2021 if I get a good bullish flag in and then just hold for kingdom come. Remember, we hit 2000 highs in 2020 for gold. We hit highs of 2000 on gold, and with COVID going on, I have no doubt we might even hit 3, 5,000, even 10,000 even. It's even possible. I prefer gold over cryptos. Nothing wrong with cryptos. It's just, for me, it's not as volatile, and it's easily tradable by any regular person. So as we can see, overextension on the stochastics oscillator. So what I like about stochastics is I like to trade a divergence. So you've picked out your pattern, you've drawn out your support and resistance areas. This is a resistance area here. We're not going to close our trade because we touched this resistance. Please remember that. Don't ever determine your take profit by resistance and support. Never do that. Follow the pattern until it's complete. So what you want to do to measure how far gold may go, you want to measure the pole, right? So this is the measurement of the pole, and then what you do is you essentially just extrapolate. And when you extrapolate like that, what you'll realize is realistically gold could go to the stars at this point. I mean, I'm struggling to even push through to see how far it could go, but at most it could go to, I mean, at least it could go to 2000. So don't use this as your take profit. What you should know is you should measure the flag, and then that determines your take profit. On my MetaTrader, I just can't view the take profit. So after you've identified your pattern, you've set your support and resistance, you look for divergence. So we get to the support area and we're looking for a divergence. Here we go. This is a divergence, is just a W or an M. So here's the first leg of the W, here's the second leg, here's where we want to get in. And as you can see, this leg formed perfectly, and then this was the divergence. And on top of that, we had this reversal pattern of the candlesticks. Let me just zoom in. We also had reversal pattern of these candlesticks right here. So you also shouldn't just let the stochastics determine whether you're holding a trade or not, because someone will say that this is overextended and price is going to collapse. Now you could take that view if you want. Personally, I use the stochastics only for entries, right? So now that I've determined that it's a divergence and it's a buy position for me, and we've seen a reversal on the support area, I close it. I'm not going to use that to determine whether I'm going to stay in or not. And then we go down to the 4 hour. On the 4 hour, remember, we look at the 89 moving average, and as long as we're above the 89 moving average, it means we're on an uptrend. As long as we're below the 89, it means that we're in a downtrend. So we're above the 89 moving average, that shows we're in an uptrend. This is a pin bar right here. This is a bullish pin bar, which shows that price could go up. Now that we've done everything, we've looked at all our technical analysis, and we've determined, okay, the crossover happened on the 1 hour, right? Here we go. The crossover of the 8 moving averages happened right here. 8 moving average and 21 moving average on the support happened here, and there was another divergence. So we bought in here, right? Now that we've determined all of that, what is the major thing that I was talking about where I said that determines the price of gold? The main thing is the US dollar. So the US dollar's strength determines whether gold will go up or down. When US dollar goes down, gold goes up. When gold goes up, US dollar goes down. So they have a nearly perfect negative correlation. And if US dollar continues to flop and just drop, then we can expect gold to keep going. And then if the US dollar decides to push up, right, and go up, then we can expect gold to go down. So once you've done all your technical analysis, and you've determined it's a buy, always check the US dollar. The US dollar will tell you whether you're going to buy or sell. That's personally my experience with correlations. That may not be your experience. And especially now where we're hitting this major resistance here, anything could happen. Anything could happen here. Price could just flop and just drop, and then it would be an early entry for someone who's looking to buy in. So that's why it's important to look at the US dollar. Right now the US dollar looks like it's going up. As you can see, it looks like it's just shooting up, so gold will be dropping. And that's pretty much it, guys. Thanks.